What's up, everybody? This is Sunko, the Bro, and today is 2022, June 8th. Uh, I had not much time, so I didn't have much time to look at the articles. And also today, I don't have much time, but I decided that I really wanted to do YouTube Live. So, okay, let's go over articles. Uh, Goldman Sachs buy these two stocks before they surge over 40%. Stock market live up. The stock futures fall as inflation concerns persist. Stock futures waver as investors more stagflation risk. The analyst says inflation is here to stay while Target is cutting prices. They're not at odds. Eight big growth stocks are now even cheaper than value stocks. Amazon stock split delivers more than bargained for. Mounting that means the Fed has shifted from the stock market to treasuries analyst. Seeking at least 10% dividend yield, analysts suggest two dividend stocks to buy. Cheap stocks to buy. Should you watch these five growth stocks? Fund legend Peter Lynch combined two investing styles to earn 29% per year from 1977 to 1990. Here's how you can apply the same mark. Kathy Wood's asset plunge is biggest among ETF eastwards in 2022. Axon gets an upgrade to buy, but Alice takes a cheap off table for two other old stocks. Roku stock surges after report of potential takeover by Netflix. Home affordability has collapsed in 2022, and this is what to expect next, according to Bank of America. Top 10 stocks by searches on gas, which is number one. Facebook changed its name, now it's changing its ticker. What it could mean for the stock. Musk economy warning demands attention, says Morgan Stanley. Shopify shareholders approved 10 for 1 stock split and plan to keep CEO firmly in control. PayPal is pushing further into crypto as payments competition hits up. Rivian writes a letter to shareholders. Cash is king and batteries are key. A firm investor should sell now, buy later, analysts say. Is Google buy or sell a stock split approaches? Three reasons AMD's analyst day will be transformative. Stocks edge higher as investors weigh jobs rates outlook. Three major stock indexes take a bullish turn. Fintech stocks to buy, watch or sell as Apple jumps into buy now, pay later. I thought it was a sick joke. They gave up other job offers to work for Coinbase and are now unemployed. Neo stock is under the microscope ahead of earnings. Here's what to expect. Western Digital stock is popping. It may spin off its flash memory business just like Elliott wants it to. From customer spending to corporate earnings, inflation is impacting seemingly every aspect of the global economy. So it's not surprising that elevated prices are affecting stock valuations too. Historically, when inflation flares up, equity price earnings ratios go down. When inflation is subdued, P&E ratios tend to rise. Why is that? Is Micron Technology stock undervalued? Like most semiconductor names, Micron Technology is down significantly this year, as it is its P&E ratio. It is trading around 9 times trailing earnings, which is well below its 5-year historical average multiple of 13 times and miles away from the industry average of approximately 22 times. Is Brad Financial buy and hold stock? Is Owens Corning stock deep value? Is Autodesk stock a buy? Is Paylocity stock worth the premium valuation? Okay, is Salesforce has bounced 20% off its bottom and done in sell in a high volume fashion. Last week's first quarter earnings report was the accelerant. The customer relationship management SaaS provider outperformed its own revenue, EPS expectations in addition to those of the street. Mm. The customer relation management SaaS provider outperformed its own revenue, APS expectations in addition to those of street. The unlikely double beat was driven by contributions from all business units, including the recently acquired Slack, which shipped in $344 million in revenue. What is even more encouraging than the recent financial results is the fact that Salesforce is hiring like crazy. It expanded its workforce by 30% in the quarter, ended April 30th in anticipation of strong demand for cloud based CRM solutions across industries. New offerings that cater to the mobile, data analytics, artificial intelligence, and social networking markets are poised to be the biggest growth drivers. The most compelling narrative from a long term perspective is Salesforce expansion of its addressable market. It is doing so by launching new products, introducing extensions of existing products, thereby generating cross sell opportunities. Meanwhile, brand new markets are being entered through M&A activity, including buyouts of Slack, Tableau, and MuleSoft. At the midpoint, management's projection for current year adjusted EPS imputes a 39 times multiple. While far from cheap, maybe a price worth paying given Salesforce exposure to an expanding lineup of growth opportunities. Is Autodesk stock a buy? Autodesk also gapped up on the heels of a strong first quarter report. The trading volume wasn't as powerful as in the case of Salesforce, but with the stock still approximately 40% below last year's peak, there could be plenty of upside. The market of AutoCAD and other design software turned in 39% profit growth in first quarter. The maker of AutoCAD and other design software turned in 39% profit growth in quarter first, handily topping its own guidance and analyst consensus. Like Salesforce, the performance was driven by broad-based strength, which tells investors that Autodesk is experiencing steady demand across all end markets. And lacks a weak segment that can sometimes limit a stock's potential. In addition to AutoCAD, its architecture, construction, engineering, manufacturing, media segments are already starting the new fiscal year on the right foot. Autodesk lowered its full year guidance uh, due to the effects of a strong dollar, a software industry trend that started with similar verbiage from Microsoft last month. Foreign exchange headwinds are of particular concern to Autodesk because two-thirds of sales come from outside the US. While the new projection of $5 billion in FY23 revenue isn't as much as some had predicted, it still implies 12% growth. More importantly, Autodesk has the demand and pricing power to drive another big jump in earnings. Still, SaaS firms are estimating 32% in profit growth this year. The vast majority are calling the stack a stock a buy, with most price targets near $300. Okay, software application technology. What does it do? Provides 3D design, engineering, entertainment software, and service worldwide. The company offers AutoCAD, Civil 3D, serving design analysis, and documentation solutions for civil engineering, including land development, transportation, environmental projects. Beam 360, a construction management cloud-based software. AutoCAD, a software for professional design, drafting, detailing, and visualization. AutoCAD LT, a drafting and detailing software, computer aided manufacturing software for computer numeric control machine inspection and modeling for manufacturing. Hmm. So, like that is Velocity stock worth the premium valuation? Velocity Holdings Corporation slide from the $300 level may finally be winding down. Shares of the payroll and HR software provider have rebounded 19% from last month's low and regained its pay low stock, pay low CT. Mm. Heavy buying points to upside for these three stocks. Is Dell Technology stock undervalued? Will Roche Holding stocks go higher? What is a good utility stock? Alien Energy Corporation has its sight on the new all-time high after last week's big green volume spike. More than 10 million shares were traded on May 31st until the stock that typically sees around 1.5 million shares exchange hands on a daily basis. Hmm. The regulated electric company was a month removed from reporting a 13% jump in first quarter earnings when the sparks began to fly. Absent a non-insider buying or large hedge fund purchase, the stock seemed to get a jolt from feelings that inflation may have peaked. Time to buy Take Two Interactive stock. First one we have is Snap revised guidance and steeping losses is in a perilous situation by its own admission. During the company's quarter first earnings call, executives stated that the macro headwinds that have gripped the broader market will continue to affect the company during this quarter and will possibly deteriorate further. Some of these headwinds include the war in Ukraine, supply chain disruptions, and inflationary pressures. The result of these forces is that they have contracted the marketing budgets of Snapchat's customer base and reduced overall economic confidence. Furthermore, the visibility of how these headwinds will play out is uncertain, thus making them difficult to predict on a forward-looking basis. The result of these uncertainties is that Snapchat predicts its revenues will grow by an anemic 20% to 25% in quarter second while also incurring a significant net loss. Snapchat is also being punished from a valuation aspect. The company is currently down 67% and trades 59% below the market. Beat tech stocks without earnings were violently sold off as part of the sector rotation. but Snapchat was hit particularly hard. Advertising dollars from its potential customers or flowing to platforms such as TikTok, which is the undisputed leader in short form video that competes for the same user base demographic as Snapchat. On the positive side for the company, user engagement remains strong and is growing. Daily active users on the app grew to $332 million, growing at 18%. Total time spent by users 25 years old and older also increased by 25%. The app also has a lot of runway for growth in alternative markets outside of the United States, such as Southeast Asia and India. Mm. In general, we have an upward trend today. Mm. Jane Kramer says, buy any deep in our stock. Here are three name analysts like Metador Resources Company. The first old stock we're looking at is Metador Resources, uh, California Resource Corporation, Northern Oil and Gas. Mm. These three dividend stocks offer monstrous yields between 8.5% and 16% for inflation defense and hefty cash income. Take a closer look now. Each on Enterprise, Rio, Roman Technologies. These initiatives haven't unlocked the value for the shareholders yet. Goldman Sachs buy these two stocks before they surge over 40% for storage. Uncertainty has been the name of the game in 2022, a combination of negative macro developments. That doesn't necessarily mean there aren't good opportunities to take advantage of right now. The analysts at banking giant Goldman Sachs have pinpointed two names which have recently outperformed market expectations, which they believe are set to surge ahead even in the face of the unhospitable current environment. The first stock in Goldman Sachs radar is Pure Storage, a provider of various data storage products, PSTG. Hmm. Okay, it's already on my portfolio. Hmm. Okay, let's look at the reasons why its author really thinks it should be on my portfolio. Okay. The first stock on Goldman Sachs radar is Pure Storage, provider of various data storage products. The company's flash-based solutions. Okay, come both in software and hardware form and are used in data centers. The company began by using third-party solid-state drives mm, for its storage solutions. However, its own proprietary hardware soon replaced those SSDs. And the company also brought into the market integrated the duplication, compression, and artificial intelligence software to help business conserve space and set up their devices properly. Okay, so it looks like this company has something to do with storage. Instead of using SSD, they have their own technology which can help clients to compress and by using artificial intelligence they can somehow conserve space and set up their devices properly. Okay, let's move on. Pure Storage has formed a strong partnership with Meta, having assisted in the development of the initial version of its AI research infrastructure in 2017. Since then, the pair have continued working together, and earlier this year, okay, it's um it is partnered with Meta, which is the company that I really, really, really think might don't go. Is it very, very big? Okay. Tabang. I knew there was one person watching me because there's a number one, you know, written uh, at the side of the screen. I didn't know it was who. Anyway, my girlfriend is also studying right now. Let's move on. It doesn't really interest my hmm, it doesn't really interest me. No? 멍이. Seeking at least 10% dividend yield, analysts suggest two dividend stocks to buy. Great Ajax Corporation, REIT. And next one we have is AJNC Investment, another REIT in the mortgage-backed security market. I come across a lot of REIT ETF and stuff like that, but I'm not that interested into those kind of things. So we'll go over to the next one. Just lie. Just lie. Just lie. This article is one that I covered last time, so I'll skip on this one too. Lie? What do you mean by lie? Lie? Fund legend Peter Lynch combined two investing styles to earn 29% per year from 1977 to 1990. Here's how you can apply the same market trouncing technique today. Uh, this is the one that I have to read in detail because I know it's not that long, and plus, it's got bunch of not knowledge, but like his insights is just lie, just lie, just lie. Stay in bed. Oh, I get it. Okay. 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 My original plan was to do YouTube live till 11:15, but now my plan changed. So uh, I'll see you guys tomorrow. Mm. And I'll be back tomorrow. Okay. Oh. Okay, my plan changed again. Okay, let's go back to the article, okay? Here's how you can apply the same market trouncing technique today. Legendary investor. Let's read this aloud. This one is really, really, really good one. It's like the article. Okay. Awesome. Awesome. Okay. It's my time. Okay. Uh Here's the guy named Peter Lynch. I love this guy. I didn't read a book written by him, but when I was really young, uh, I saw my father reading a book written by this guy, Peter Lynch. Okay, let's read this aloud. Okay, legendary investor Peter Lynch was well known for his stock picking skills. Well, it's like the skill that I really, really want to have because, stock picking skills. Oh my God. His magically funded Fidelity investment delivered a compounded annual return of 29% between 1977 to 1990. During that period, Magellan was the world's best performing mutual fund. Lynch's approach to investment was noteworthy for its optimism. After all, he single handedly popularized the GORP, growth at a reasonable price, investment technique. This strategy combines growth and value investing principles, aiming to invest in companies with strong growth, but avoiding those with high valuations. This optimism was particularly effective during bear markets when other investors were gloomy. Here's how the Wall Street legend navigated downturns. Opportunity cost. Far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. Lynch wrote in his book Learn to Earn. Mm. Far more money has been lost by investors trying to anticipate corrections. Put simply, timing the market is a fool's errand. Okay, I get that. So he oh, I agree with him totally on this opportunity cost. Nobody can get the best timing, perfect timing. Nobody can get it, right? Hmm. Put simply, timing the market is a fool's errand. Not even investment legend could accurately predict the onset of recessions or the end of bull markets. Market data analyzed by Bank of America confirms this theory. Missing the 10 best days in any decade going back to 1930 had a significant impact on investors' long-term performance. Professional investors try to seek out opportunities, regardless of market conditions, to seek out opportunities. So instead of looking for market conditions, they look for opportunities. That's probably the most practical approach for retail investors as well. Focusing on secular growth. Although Peter Lynch is described as a growth investor, his approach was more nuanced. Growth alone wasn't enough. So, growth alone wasn't enough. Hmm. For real returns, Lynch focused on defense growth companies that would see their earnings rise despite market corrections. Long shorts almost never pay off. He said in his book One Up on Wall Street, which he co-authored with Joan Rothschild. No matter how bad things get, people still eat cornflakes. Long shots almost never pay off. Hmm. Lynch claimed while describing his investment thesis for the catalogs at the time. Seemingly boring companies with competitive advantage and steady growth were a prime target during recessions. Uh, These companies benefit from secular growth in their industry. That means demand for their goods and services is likely to remain robust regardless of the market cycle. So, regardless of market cycle, um, companies such as Kellogg or the companies that produces eatery still remain robust uh, when hard time comes because people have got to eat, right? Even when the economy is not in a good situation, people still have to eat because valuation cushion. I don't think people understand there is 100% correlation what happens to a company's earnings over several years and what happens to stock. Hmm. Said Lynch, focusing on earnings growth was a cornerstone of his investment strategy. The strategy has been distilled into the price to earnings growth ratio by adjusting a company's price to earnings ratio for future growth. Lynch believed the downside risk could be mitigated. Valuation cushion. A stock with a low PEG ratio would have less room to drop based on fundamentals. Fertilizer producer Nutrition currently trades at a PEG ratio of 0.29. Kathy Wood's asset plunge is biggest among ETF eastward in 2022. Is suffering a steeper drop in assets than almost any other U.S. exchange traded fund issued this year. Arch lineups hold $15.3 billion across non-ETFs, a 48% decrease from the start of 2022. Roku stock surges after reported potential takeover by Netflix. Reports suggest employees chatter. Okay. I don't have much time. My time is up, and I'll see you guys tomorrow. Okay. I'll see you guys with a lot more time. Okay. Okay. Bye bye.